We are going to bring in our next guest on that point, John. Thanks very much. Dennis Gartman joins us. He has, many views, we should say, on different commodities. He is an economist and the editor of the widely read daily financial trading commentary, The Gartman Letter. He comes to us from Virginia Beach. Lucky fellow. Dennis, we're always glad to have you. So gold, you just heard from our own John Ehrlichman there, 1150. That was quoting BNP Paribas there. Where do you think gold can go in the near term?
Well, it does look like the trend is up, doesn't it, Deidre? It's the weak dollar is clearly what's driving the gold price higher. All commodities are going higher now. Grains are going higher. Energy prices are going higher. The dollar's going lower. In that sort of environment, gold wants to go up. I'm not bullish of gold. In fact, I'm actually short a little bit while I am long of the grain market. I'm actually short a little bit of gold while I'm long of energy. But that doesn't necessarily mean that I'm bearish of the gold market. And right now, if somebody said to Dennis, you have to take a net long or short position in gold, I guess I'd rather be a buyer.
Is there a level, Dennis, that you're looking at?
Well, the trend is up, and Deidre, that after being in the business for 35 years, the best I can tell people is that the trend seems to be up, and the higher prices seem to be upon us. So where can it go? I would guess a month from now it'll be higher than where it is now, and I would guess 2 months from now it'll be higher than where it will be a month from now. But that's the best that one can do.
Dennis, you mentioned that gold prices are being driven higher by the weaker dollar. Just how low can we see the dollar go? I mean, earlier we even had the pound actually at a year high versus the greenback.
Yeah. Yeah, the dollar's getting weak against everything other than the Japanese yen. It's getting particularly weak against the other dollars, which I find interesting. Everybody seems to be moving to Canada. People seem to be moving capital to Australia. They're moving to the New Zealand dollar, which are the countries that seem very similar to the United States, but they're not moving leftward as we are. In fact, most of them are moving to the right, not abrogating contracts as we are.
But a lot of those are commodity plays, isn't that right, Dennis?
Absolutely. That is absolutely correct. You get the benefit of being dollars, plus they are commodity-related plays, and I think that's what's going on. So where's the dollar going? The dollar wants to go down. The dollar index probably wants to go down. It's very sad, but that's what's going to happen.
Are you watching at all the euro-yen cross? I mean, this has been in vogue, if you like, about 18 months. I mean, people looking at this as a measure of risk appetite. What do you see with this particular cross?
Well, it looked like for a couple of days here that the yen was actually beginning to strengthen against the euro, but that seems to have stopped. Now it seems like the appetite for taking on risk is increasing again. Watch that. It's a very good indicator of, as I call it, the thermometer of the world's appetite for risk. Keep an eye on what that one's doing this morning. As you can see, the euro is getting quite strong. The yen is doing very, very little, and in that environment, stock prices will probably be higher today.
So you say stock prices higher today, but I just want to bring in a comment from former Merrill Lynch strategist David Rosenberg saying it's unlikely that a bull market has started, and he's actually saying indices, the S&P 500 of note, could go back to its March lows. I heard you say stocks could go higher today, but do you think we're going to head back down?
Well, I will say, first of all, that of the economists that I follow, David is absolutely one of the people that I pay most attention to. When something from David comes across my desk, I'm going to read it. I'm going to pay attention. I think in this instance, David's wrong. I think we probably saw the lows that were made in February and March of this year. Can we retest? Can we go down a little bit, 100 or 200 or 300 points in the Dow from where we are? Oh, that's easy to do. But are we going to see new lows? I tend to doubt that. I think that the manner in which the markets fell last year globally discounted not only a very severe global recession, but almost a global depression. And I think the monetary authorities have done all the right things, thrown liquidity at the system, and that liquidity is finding its way first. Before it goes into the economy, it's finding its way into the capital markets, and that's as it should be.
Dennis, we thank you for your thoughts. We know you're going to stay right there, so we look forward to chatting with you right on the other side of this break. So as promised, in 2 more minutes, a little bit more with Dennis Gartman. Keep it here.
Deirdre, let's return to our conversation now with Dennis Gartman. He's economist and editor of the widely read financial trading commentary, The Gartman Letter. Dennis, you were just talking to Deirdre a couple of minutes ago about the euro-yen cross and what that says about investors' appetite for risk. I wanted to talk a little bit more about risk, ask you specifically if you've seen enough signs lately, whether it be the VIX, whether it be support for the S&P 500, whether it be the movement that we've seen lately in treasuries, for example, or the stuff going on in Forex, as to whether or not it's firm now that the risk trade is in and we're not going back to the fear.
I really don't think we're going back to the fear, Eric. And perhaps of those four, and I would point to all four of them as being important, perhaps the most important one is the VIX. I mean, the fact that the VIX just quietly continues to move lower tells us that the concern, tells us the terror that really inhabited the markets back in December, January, February, and March has been alleviated. You can look at even some of the portfolio managers. I was at my beloved NC State University yesterday for our endowment committee meeting. One of the problems is our portfolio managers are very reticent about taking on any risk. When they're reticent to take on risk, one probably ought to go ahead and do that because they're very slow to change.
Dennis, any caveats, anything? I mean, for example, the strength of the Japanese yen seems to be one potential caveat. Would you agree?
Yeah.
And if not, where else would you point to signs that perhaps it's not as consolidated, at least the risk trade, as it might be in coming months?
The thing that I would look for, and the thing that I fear the most, and the reason why I tend not to be too terribly bullish of U.S. stocks and would rather own stocks elsewhere, my fear is that we will try to do even more in the term of raising taxes. We'll try to do more rather than stimulate the economy to grow tax revenues. We'll try to do things to increase tax rates. If we do that, then all bets are off and we'll go to new lows. I hope that we don't do that. And if we do that, other economies will be doing much better. I don't see that happening in Canada. I don't see that happening in New Zealand. I don't see that happening in Australia. I don't even see that happening in China and Russia. They seem to be doing a far better job than we are. So if there's a caveat, Eric, it's the attempt to balance the budget by raising taxes and paying those at the high end of the income levels to pay a strangely fairer share of the economy, and they already pay far more than their share.
Dennis, thank you as always. That is Dennis Gartman, always opinionated, always insightful, of the Gartman letter.